In this session, we will be breaking down in details what an order flow entails. Okay, in this session, we'll be breaking down all the trading opportunities you could have been able to catch effortlessly. I mean, that you could have been able to catch and make a very good amount of US dollars for yourself. Okay, so these are my trading history this week. All right, the first one is I had about like 1:5 here on Monday. Okay, on Tuesday there was I missed one here. I slept off. All right, so I woke up, took an L. All right, after an L, one thing about this concept is that you don't argue with the market. If the market still tells you is still bullish, even if you have a bearish entry, and the market tells you it's still bullish, just join the bullish continuation. Don't even argue with the market. So in this particular scenario, I took a stop. Then I used last liquidity entry to get another entry for a new buy. So this was for the day. I closed before a new day. So when a new day opened, alright, I just joined the trend again. Liquidity, liquidity. Then I bought again. So yes. So going into later that day, alright. So same concept, liquidity sweep. First off, I was actually looking to take an entry from here, but then we didn't trigger this entry. Then a new one happened here. So for those that are getting confused, a new one now happened here, where we now add the liquidity sweep above. Liquidity sweep above. This one now automatically turns to internal. So we had the liquidity sweep above. This was a low. There was a low here, means there's one swing here. So from this low to this high means there's one swing. So the initial one created wasn't trading to the 0.5 level. So we actually used that inefficiency as a buy. So yeah, we are after this 1:5, 1:7, 1:8. I still managed to catch 1:4, 1:5 before market closing for that particular day. So after market closing, okay, before is the trading. You don't leave your trades over the day. All right, only the trading. You don't leave your trades over the day. Like whatever you are taking for that day is what you'll be taking, except you are a swing trader. I'm pretty sure some of us don't know the kind of trader, the type of trader we are. So we have several type of trading. We have the scalpers, we have the day trader, we have the swing trader, we have the investors, and so on and so forth. You just want to understand the kind of trader that you are. All right, the kind of trader that you belong also your liquidity. All right, the amount of trading capital that you have will also determine type of trader that you will be. All right. So that was on Wednesday. So Wednesday was like a very very profitable day because got a very good RRA and then joined then. So after the London closing, same concept. We have minimum of three candles here. All right. Yeah. First liquidity inefficiency. So we were supposed to enter at this 0.5 level. We were supposed to enter at this 0.5 level. But then it was like London, New York closing. I mean London closing and New York closing. So I could not enter anymore because after 5 p.m. I don't take any more trades. So I just like speculate. So after speculating before the new day, all right, markets invalidated this low. So I didn't really like got bothered. All right, due to this invalidation, I knew the following day we were just going to be testing for last liquidity. Just know that let's assume I'm taking a buy, and then we had a sell. You had a sell. I just suddenly have a sell. Just know that we had another flow changes here. Perhaps maybe I've taken a stop loss right there before we started to sell. Off. Do you get? So, but in rare cases, you can also avoid taking stops like that using your rules. Alright, there's what we call sentimental analysis because we have three type of analysis. We have fundamentals, we have technicals, and we have sentimental analysis. Sentimental analysis is when you know when the market is overbought or oversold, or you know exactly when to close the market and when to open the market. So this is the new day for Thursday. This was on Thursday. This was on Thursday. Alright, so after the opening, I just knew we are going to be using last liquidity. I mean the last value swing created. So this was the last value swing created, and our stop loss was just above here, and then we sold, off from there. We just sold off directly. Alright, so this today, alright, today something came up today. So I told you guys I'll be looking for market to either clear this low or clear this high. Now when I said that, after market cleared this high, I just knew, I'm not in this entry actually. I'm not in this entry because why? There are so much this is already looking like another phase of order flow where we had a value swing, even though they are little, but then it's still a value swing. Do you get? So we have first swing here, we had another one here, we had another one right here. So if I'm gonna be covering my stops, then I will just use this last liquidity. I mean this enclosed eye right here. Give me a moment please. So I'm just gonna be using this enclosed eye right here as an entry. So I will still try. I'm just like doing a recap of all my trades. So I just use that eye closing right there as my stop. Initially my stop loss was supposed to be at this eye, I mean the last immediate swing created, but then just to give my trade a breathing space, I just used that last eye right there. Alright, so and that was how I didn't take this trade because it was getting late in the day before it triggered. Then I just had to like just let it go. So but then I just came back from wherever I went to just to discover that price tagged along and then it's dumping or something. So that was all for the week. Now let me try to break this concept down for everyone that are not getting it. Now to trade another flow, you need three things to be able to trade another flow efficiently. Number one, you need the directional bias. Alright, directional bias will tell you if you are supposed to be looking for buys in the market or sells in the market. For an example, the only reason why we don't really have a directional bias on gold right now is because we are in an all-time high. I mean, market is just buying and buying and buying, so there's no past data to analyze what is going on in the market. But then we usually use a directional bias to determine when the market is going to be reversing to. Alright. First off, you want to have a liquidity sweep of this high. Alright, your directional bias, you most definitely do it on your monthly, weekly, and your daily time frame. So most definitely, we usually anticipate that price will trigger a favor lookup before going for a new high. So that was for directional bias. Alright, so after the directional bias, there's what we call point of interest. That's when you now narrow down into like 4 hours, 3 hours, 2 hours, and 1 hour time frame to look for your area of concentration or your point of interest. Might be a valid order block that that zones. Alright, then you just anticipate that price will trigger into that zones to look for a valid reversal. So and that's where you go into like the third part, which is entry confirmation. So at that entry confirmation level is where you would now go into like 45 minutes, 30 minutes, and 15 minutes time frame to look for your entries. I hope someone understands. To look for your entries. So let's take it a step further. That part is where you go into your analysis, and then you go and find a very suitable entry for yourself. Okay, so the entry confirmation, the POI will most definitely always use is higher probability order block. Once you get there, if you are following this community, we will definitely get to the point where we will start to use directional bias, where I will start to explain using directional bias. Alright, so let's take it a step further. Alright, to take all these entry confirmation is pretty easy. We have two types of order flow. Alright, after understanding this the directional bias, weak directional bias, point of interest, and entry confirmation, the entry confirmation is what will now take you to what is called the order flow. Now order flow the order flow is what will make you identify if the market will still continue to buy or the market will still continue to sell. Alright, it's the order flow that will make you know that market is that will help you understand the three concepts together. the fundamentals, the technicals, and the sentimentals. Alright, order flow will make you understand that, oh, price is in an overbought situation. Okay, let me close at this point. Then I can start looking for multiple multiple sales. Okay, so let's take it a step further. We have two types of order flow. We have the phase one order flow and we have the phase two order flow. Now this is how the phase one order flow looks like. Alright, alright. If you are trading on gold, you want to stay on your 5 minutes time frame. It's very evident on 5 minutes time frame. Alright, you just want to look for patterns like this. Alright, for those that will be back testing this night, alright, you want to do your back, you want to take it very seriously. So the first one is you have a liquidity sweep above at this high. Alright, that's one. Alright, number two is you want to anticipate a new break of this high. Alright, the first one, break of this high. Second one, a break of this second high. The third one is you anticipate that price triggers, like price retraces back a little bit to come and trigger. This is what we call the power of three. Alright, sometimes we call it the power of three. It always happens on every candles power of three concept. Right, where this will be the accumulation, the price will manipulate to the other block here, then it will now buy off, right. This is a valid example right here. Let me show you. As at this point, take a look, at this point. First, this was on Monday. We had a liquidity sweep above at this high. Alright, a liquidity sweep below. Alright, even though we have rules behind how we select a valid swing. Alright, for an example, this must be minimum of three candles. Minimum of three bearish candles will make a valid swing. So we have minimum of three bearish candles, so this makes a valid swing. I'm not going to call this a valid swing, but I'm going to call minimum of three bearish candle a valid swing. And once that is, we measure from the other block is trading to 0.5 level, is what I will call a valid swing. So to this low, then you use another block just like I explained, then your stop loss is just going to be at the initial low. So that was how I was positioned at this entry right here to take a buy. So that was the first buy. Alright, so the first buy, this was for the day. If you notice, price opened at somewhere around here, price manipulated into the entry, then buys off. Alright, accumulation, manipulate into this zone, then buys off. Alright, then you just want to close before you know it. Alright, this is another entry forming. This is another entry formed right here, because first off, this was the only reason why I didn't take this trade anymore, was because we were in London closing. Alright, like markets, my London, New York session has already closed. Just like I said, I don't take trades after 5 p.m. Okay, so this actually played out very well, made me realize that most definitely we might continue looking for a buy, but then I didn't take this trade, so pay attention. This was a valid swing. From this low to this high, but I didn't take this entry. Wait. Alright, okay, so this was a valid swing. You could actually enter at another block. This is another block that is covered inside here, but then you might just use this last liquidity, and then your stop loss is just going to be on the second liquidity. You could actually take this entry, but I didn't take this entry. Why? Because it was on a London closing. It triggered on a London closing, so I just left it. So that was it. I just waited for it to like give me more ARA. Then I closed at this high right here. So that was why I left it at that point. So let's proceed. So we entered a new day. If you notice, this was on Tuesday. So on Tuesday, we were supposed to start buying. For an example, we had a liquidity sweep above this high. Alright, we just find a minimum of three candles. Alright, so we found minimum of three candles here. So but then sentimentally, I knew I was not supposed to buy, because markets just dump drastically into that zone. Means accumulation, manipulation, and distribution didn't happen well, because if your trade is going to play out, you will see enough accumulation. You see markets accumulating very well into your zone, then manipulate into your zone, then distribute. But that didn't happen here, so I didn't even try to take this buy right here. So this was a liquidity sweep. You could have actually entered, could have been able to enter as a trader as at this low. So but then I couldn't take this entry, so this was my invalidation point. So I was anticipating that price will invalidate that point. So after price invalidated that point, just like I've always explained, you can always use last liquidity. So I just used last liquidity. I was supposed to use last liquidity, but I was sleeping then. So I was supposed to use last liquidity here to start selling from this high right here. I mean to start selling from this high right here. Alright, above this high. Then I was supposed to start selling off, but I was asleep. So I just left it. But fortunate enough, um when we got to a new day, I mean when the day was like bright, alright, this was a phase 2 order flow. This will now take us into phase 2 order flow. I mean, let me look for more examples on phase 1 order flow before I start to explain phase 2 order flow. So this is another example of a phase 1 order flow. You see minimum of 3 bearish candle, we have the liquidity sweep of this high, price cleared it, then after reversing this swing is giving us minimum of 3 candles. Alright, if you notice, and if you also measure, it's also trading to your 0.5 level. So this was a valid swing for me. You could actually use this one and then another block inside there, then you just put your stop loss at the immediate swing created. If you notice, this swing, it wasn't like invalidating this one, but I just want my trade to have a breathing space, so I just left it at this point because of some crazy spreads from either the broker I'm using or anything. So yes, so that was how we managed to get another entry here. I was looking for a way to add a position here using the alchemy continuation, but I could not until later that day when we had a trigger like this that I shared the trade with the community, and most of you guys took the trade on Telegram. So same thing happened here. Alright, the first one was a liquidity sweep above, a liquidity sweep below, so minimum of 3 candles. Then this was the phase 2 order flow. Alright, I'm not going to be explaining that. Let me just, I don't think any other trade happened like that anyway, except for this one that now that we used a reversal entry. Okay, so that's for phase 1 order flow. So let's go into phase 2 order flow. Like phase 1 I explained, first liquidity sweep, second liquidity sweep. You anticipate that price will trigger this liquidity, trigger into the trade into the 0. Order block, then your stop loss is just going to be on the second liquidity, then you can actually take a buy from there. So that's the phase 1 order flow. So this is the phase 2 order flow where we have an inefficient market. For an example, where price just surge, then the next swing didn't like trade to 0.5 level, something like this. Then you know, so what happened here was, if you measure this high, it was trading to 0.5, but if you measure this one, it wasn't trading to the 0.5 level. Like if you measure this one, it's trading to 0.5, but if you measure this last one created, it's not trading to 0.5 level. So if you're not trading to the 0.5 level, you could actually use the 0.5 level as your entry, or you could actually use another block that's created here as your entry. So you just anticipate that price will trigger that low, then buys off. So that's a phase 2, order flow. For those that don't know it, that's a phase 2 order flow. So let me take us back to trades that happened today on that particular system. So this was phase 1. So this was phase 2 that we took an L there. Alright, it's so important. This is the first swing, minimum of 3 candles. Can you see? This was the first swing. So the initial swing created was from this low to this high. So I just measured 0.5 level. I entered at 0.5 level, tried to reverse from there, but then market is still bullish. So it took us out. Then I just knew market is still in a bullish sequence. So when I discovered that market is still in a bullish sequence, what do? I use last liquidity. You can also use your entry you use last as your last liquidity. But then I'm not gonna be using this one because I still have a valid swing right below. So this was a very valid swing. You could enter at the opening. You can enter at the opening, or you can enter at that high. But I just decided to enter at that high. Alright. So you could actually take a buy from there. But then markets, I don't leave trades overnight. So this was 8 p.m. So I just had to close at 1:2, 1 point something to 1:2 right there. So after the opening of a new day, I knew markets was still going to come and trigger my what's it called, my power of 3. So we had a liquidity sweep above, minimum of 3 candles inside, liquidity sweep below, I could use another block right here, but there's no other block, so I just put my stop loss low and I started buying. All right, I bought and bought and bought, and that's how it works. That's how a phase two order flow works. And in the case of you took an L. Now this is what will always make you profitable. Like this is what always makes me profitable in the market. I don't usually argue with the market. For an example, let's assume I'm supposed to take a buy, and then the buy invalidates me. All I have to do was, if the buy invalidates me like this, invalidates me, takes out my stop loss. All I have to do was use this last liquidity created right here to take a sell off, like this. And that's how it works. You don't have to argue with the market. All right, if you have market giving you a bearish, like a very long bearish market, just look for last liquidity, enter, and then you can make your money. All right, so I hope I've been able to touch some couple of things. If you have questions, just try your possible best to drop it in the comment section. And if you are not following me everywhere on the community, make sure you are following me at TP with Polarity. Join the Telegram channel, join the YouTube, join the TikTok, join everywhere. Alright, because I'll be dropping some insights, because I want everyone to understand this concept and make some good amount of money from it. So if you have any question, this is the best time for you to share your question. So I'll catch you guys on the next one.